What's happening, everybody? I really appreciate you tuning back into another video here. Before I dive too deep into the video, I really want to ask a huge favor from everybody. If you enjoy the video at the end, please hit the thumbs up. Don't forget, it really helps me get this video content out to the most possible people, trying to grow the channel as much as possible. So I really appreciate that. But I'll dive right in. So basically, this is going to be one of the more important videos that I've ever done on this channel. And in my opinion, it's because we're going to dive, sort of surface level on some of the economics, but we're definitely going to take a more macro view and give an idea of what is possibly happening economically to this cryptocurrency market. So I've been hearing a lot of questions like, yo, why is Bitcoin falling so fast? What's going on with the crypto markets? We have the Consensus 2018 blockchain week is going on. Like, generally speaking, over the past couple of years, this has launched a bull market. I mean, we're in May. Everybody was expecting April to be the big bull market launch, but comes to May and then look, we're in the red again. So my outlook on this, and a lot of people are talking about, hey, it's still manipulation. The big guys are still coming in and they're just driving prices down to get good prices. And although that may be true, especially with the market cap at 365 billion, which is tiny. If you look at how many currencies there are, 1,593, I mean, there are multiple Fortune 500 companies that are bigger than the entire market cap of all of these coins. So, and then with the Bitcoin volume, the 24-hour volume is at less than 6 billion. This is tiny compared to what we've seen in the past, I don't know, year or so. So, I mean, I'm not taking manipulation off the table, but I want to intertwine it with another theory that a lot of, experienced traders and experienced investors always look at, and that is the bond market. And so what I want to talk about is the bond yield curve. And basically, if you're unfamiliar, the bonds and the bond market give a very, very good predeterminant to what might happen in any other market, right? And we're not completely sure about what may happen in the crypto market because we're still so new. We're only at 360 billion or so in market cap. But in terms of old school investing, right? The stock market, real estate, investing in bonds or ETFs, different things like that, right? The bond market is a very good indicator of what may or may not happen in the future. And the bond yield curve tracks the difference between the longer and the shorter term bond yields. And basically in past results, right? In history tells us, it leaves us a lot of clues. And basically when the bond yield curve starts to flatten, we have seen recessions. And the past 7 recessions, this bond yield curve has been a perfect indicator of these recessions. So they play out a little bit differently each time. So don't think that, just because it flattens, it's automatically a recession and we're all in deep shit. But at the same time, this is definitely something to think about because this can have major implications on not only the stock market and the real estate market, but also the crypto market. So I want to just dig a little deeper into this. This is currently the longest time since the yield curve inverted, says the Hickey. The bond market has not seen an inverted curve in 2,767 trading days, the longest streak in history. And this stretch beats the last record of 2,265 trading days that ended in 1998. And this is actually larger now because this article was written about 2 months ago. So this tells me, okay, if we're looking at the daily treasury yield curve rates, basically if the shorter term yields are catching up to the longer term yields faster or quicker over the next few days or weeks or months or years, it means that the bond yield curve is starting to flatten. And in history tells us this signals somewhat of a recession. And they go on to talk about in this Forbes article that, this is going to be, the Fed will grow more hesitant to hike rates and different things will happen. I don't want to get too much into the economics of how the Fed can prevent certain things. But if we just look at TradingView and we see this is the US 10-year yield, and this is at 3.127%. And that is super close to the US 30-year bond yield. So this is sitting at 3.259%. And basically, to put this in layman's terms, if you're looking at these bond yields, if you're going to loan your money to the US government, and keep in mind, there are many other types of bonds. They're corporate bonds. And those are, we're just kind of leave those out of this discussion, because in my opinion, and a lot of other people's opinion too, is the government bonds are what really drives the market. But if you put it in layman's terms, if you're going to lend your money for 10 years to the government, you would expect to see a return, right? A return on investment. But if you lend your money to the US government for 30 years, you would probably expect to see a little more of a return on investment than lending it for 10 years. Because you lent it for longer, there's more variables, that's 3 times the amount. Why would I risk, putting, $50,000 in a bond for 30 years when I can get virtually the same rate at a 10-year bond? And that goes all the way down to the 1-month bonds, right? So obviously, looking here at the most recent numbers, a 30-year bond is 3.25, which is about what we're looking at. We're actually at 3.26 right now, which is kind of a good sign. And the 10-year was at 3.11. So the 10-year actually increased as well since the time of this publishing. But the same thing happens, right? Like you want to get the most bang for your buck. Where makes the most sense to loan your money to the government? Where are you going to make the most money? And basically, when you make more money in the shorter term, the system starts to break, right? It can't last forever, right? Because it doesn't make any sense. The government is getting less money for a shorter amount of time, or they're giving away more money for a shorter amount of time, and things start to break. And that's what happens in the recessions. And a lot of big analysts are saying that this could cause a recession in the near future. And they've been calling it for a while, but it's just something to think about. But basically, my thoughts on Bitcoin and the crypto markets are, we need to be aware that the crypto markets are no hedge against the bond markets, against the equity markets. Crypto has not proven itself at all in these very, very tough situations. Yeah, in crypto, we just went through a very tough situation with that big crash from 20,000 down to $6,000. But that's a normal market correction. That was a bubble bursting to some extent, and that was its own situation. Whereas these bond yields can affect different markets. 100% they can affect different markets. And what I want to get into is the big money that is coming into crypto and that everybody's been talking about. Oh, all this institutional money is coming. Well, guess what? Those institutional guys are investing tons of equities. They're invested in tons of bonds. They're invested in corporate bonds. They're invested in everything you can imagine. And what happens when there is a recession? Their money starts to shrink. Simple as that. And unless they are a perfect hedge fund and they know exactly how to manage every market situation, it's likely that the crypto market, being the size that it is today, will also decrease in value. And that is just something that I'm keeping an eye out for, because for me, that's a great buying opportunity, to be honest. So if we do see lower lows and everything, I'm fine with it. Just gotta hodl for dear life, right? But what I'm looking at here on the Bitcoin chart is I'm looking at this Fibonacci retracement from low to high, and we're sitting on the 4-hour time frame, and we cut through the 50%. And I apologize, my computer is just going so slow, but we cut through this 50% fib level, and we cut through it like butter. We didn't even come back to retest it yet, and I sort of don't expect it. Generally speaking, you would see kind of a retest and then another lower low, but it looks like we're making a low right here. We have a tiny little green candle there, but what I'm expecting is at this $7,800 mark, this 0.618 fib level. This is where I'm expecting to see a bounce, assuming there is no awful news coming in this bond market deal and all of this stuff, right? But this is my, and I don't talk about this all too often about entry points and where I'm looking to make trades, but this to me looks like a pretty valid spot. You have to do your own research. I'm not telling you to go and buy at 100 because it is very possible that we just break right through that, just like butter, just like we did at the 50%. And then we come and maybe retest this 0.786 line. But the 0.618 is the golden ratio. And I'm looking at this as a good bounce point. And I don't see this as a prolonged bear market. I've definitely, we've been in this a while. And we've seen these impulsive moves, and we know that the buyers are still there. One of my opinions is this bond market sort of drove us down in price the past week. And I also think that this consensus 2018 deal, although it was probably the biggest one in history, I think there were 8,500 people that ended up going to this conference. People had said that it really was kind of a bust. There wasn't a lot of news. I apologize for this freaking computer going so slow. But a lot of people have been talking about how it really isn't, it wasn't what they expected. There was just like surface level talk. And that is very likely that also drove the prices down today and over the past week, because what do people do? They buy the hype and they sell the news. And if the news is not as good as they were expecting, they're going to sell and the prices are going to drop. And to me, that is probably what happened. There were a couple bits of news that came out just off the top of my head while this freaking thing is loading. I apologize for this, guys. But, basically the couple bits of news that I can remember off the top of my head was, Jack Dorsey was talking about, obviously that's part of the URL here, but, Jack Dorsey was talking about basically his Square app and how he wants, they were one of the first companies to endorse Bitcoin and start accepting that as a payment, which is fine. But what kind of news is that really? Like what kind of news does that bring? A lot of the Lightning Network stuff came out during this conference and they really brought no new news. The past 2 years, the Lightning Network team for Bitcoin has been talking about bringing this. It's going to be so great. It's going to be the best thing since sliced bread, and it just doesn't come out. They have no new, real, solid, tangible like news, no evidence. So to me, that's another sort of downtrend. I mean, the HTC wants to put your phone on the blockchain. That's kind of cool. That'll be interesting whenever that comes out. They don't have a price target or a time frame, but that'll be interesting. And then Ethereum obviously wants to make blockchain easier. So that's also very interesting to see, but nothing super crazy. The SEC came out and said that, they want to protect us all. They're talking about, Bitfinex and Tether, and they really want to, make sure everybody is safe. All the investors are safe. And that's great news. But what really tangible came out? And these are my reasons for this drop, right? I mean, buy the hype and sell the news. I can't believe how slow this is going. I'm sorry. But buy the hype and sell the news. And essentially that's what's happening. And I had multiple people, friends of mine who went to this consensus 2018, and they kind of said the same thing. They said it was cool to be there. The networking was great, but the speaking and the actual information was surface level. And for us in the community who are making investments, you wouldn't see a venture capitalist invest in a company that doesn't give any details. And so that is basically my outlook on this. And same with the institutions. They're probably like, show me the proof. And, that's kind of my opinion on all this. And not to mention the interest rates and, the bond yield curve that I think could play a very, very interesting role in not only the crypto markets, but the stock market and everything. And in my opinion, when this sort of finance happens, which crypto is a great spot to be in. Now, do you get in now or do you wait until the crisis happens? That's another situation. But crypto is going to outlast the crooked banks and stuff, right? This stuff's here to last. Jack Dorsey even said in this blockchain week that needs a currency, and that's what's going to happen. It's going to happen. It's here to stay. So with that said, I will catch you guys all in the next video. Leave a like and I'll catch you.